Roy, Managing Director with Star Health and Allied Insurance, joins us now. Anand, good morning. Thank you for joining us. I'm going to start with a question which may perhaps talk a bit about your history of going public and then underperformance in the stock. For a company which has gone public closer to 900 rupees, the stock has completely collapsed. What are markets missing on? I mean, a company, when I remember when Star Health went public, our assessment was market leader, business will come back. COVID was a one-time effect. The company will continue to grow. They have a great retail franchise. Everything is working for you. But someone in the market is hammering the stock down. Is there a lack of communication or something in business which we need to understand?
Morning, Nikunj, and thank you for having me. All the points that you mentioned hold true even today. Star Health is a market leader in the health insurance business, especially in the retail health. There is a great growth opportunity in this business, and the distribution franchise that Star Health Insurance has created over the last 15 years is one of its kind and probably the best in the industry. But yes, as far as the performance of the stock is concerned, I think investors with a little bit of medium and long-term, perspective will understand the value of the business, because we are coming out of a 100-year-old pandemic right now, and it's only now that the things are coming under control as far as health insurance business is concerned. Because as you are aware, till March of last financial year, there was Omicron, there were other waves, and there was an impact on the business. But now, as we speak, things are coming back to normal, and we believe that going forward, as the company continues to perform better and better, the stock will correct itself.
Is the entire COVID write-off or the COVID extra charge which you had to take, is that behind the company?
Yeah, so if you look at our, numbers in the months of April and May, and also in the last quarter of the last financial year, we saw a downward trend in COVID claims, and we are seeing normalcy happening even as we speak. But COVID has not totally gone away, and there has been spikes here and there, but these are not waves. These are community spikes happening in different parts of the country. So we believe that as more awareness is there, customers understand that need for hospitalization is reduced. I think we can safely say that the large impact of COVID that we saw last financial year will definitely not recur again.
Anand, that point is taken, but should we then assume that the claims ratio, which stood at almost over 80% last year, is expected to come down? And also wanted your take regarding the combined ratio as well. That was above 100% in the year gone by. Where can it stabilize to?
So last year, the claim ratio, which was around 87%, including COVID, if you exclude the impact of COVID, the claim ratios were very much near our expected lines. And pre-COVID, if you look at our performance, we have been able to deliver, a consistent claims ratio of between 63 to 65%. We believe that going forward, that will happen as we, from this financial year onwards, if things remain under normal circumstances. As far as combined ratio is concerned, the company has been profitable pre-COVID, and we expect that from this year onwards, we will be back to profitable business management. And our combined ratio should operate between 93 to 95% going forward.
Sorry, if I can just follow up there. You said, yes, the combined ratio will come down and the profitable growth will resume. Any target you have in mind for that? Whether it will be back to that 90 to 94 band, which was there pre-COVID?
That's exactly what we are targeting. As a management, we expect that from this financial year, we should be able to come back to our pre-COVID performance, where our combined ratios were below 95%.
Large component for any insurance company is the income from float. Just for the benefit of our viewers, Anand, I'm going to break this question. Insurance companies, they charge premium, and that premium is also invested. But a large part of the premium, Anand, is invested in government securities or in debt market. Even where yields are headed, how will you manage that volatility?
So see, the business, the investment portfolio for us, as you rightly said, is regulated as per the regulations drawn on by the IRDAI. A large part of it is in fixed income. But see, our portfolios are held to maturity. So we do not see any mark-to-market losses as far as fixed income portfolio is concerned. And in fact, the new floats that we are generating in our business will be invested at a higher yield. So I think, the current situation is actually beneficial for companies like Star Health because we have very low exposure to equity right now, but we are looking at the equity market also in a big way. So given our fixed income portfolio, we expect to deliver better yields from our investment portfolio.
Yeah, Mr. Roy, this is Nayanthar also joining in on the conversation. Can you explain to us a little bit what your strategy would be as far as distribution goes, with a special impetus and focus on bank assurance? What are your plans as far as that goes?
Yes, so Star Health is a retail-focused company. We are a largely B2C player where we have a very large distribution, on-field distribution of about 550,000 agents with about 1,000 odd offices who are selling our policies across the country. So our model will continue to be retail-focused and driven through the agency model. But having said that, the alternate channels like bank assurance and online is growing very rapidly for us. We have recently signed up with new banks like IDFC Bank, and few others we are in discussion with them. So I think, the bank assurance piece will continue to grow strongly and will contribute at least, 20% of our new business here onwards, which used to be less than 10% in the previous years. So I think that's what we are expecting from the bank assurance channel. And also the online channel and online business is growing rapidly. So these two will continue to be our focus area apart from our retail agency business.
Okay, that point is taken, Anand. Wanted to understand from you how the trajectory is moving for the group insurance as well, because we understand that usually comes with a tad bit of lower margin. In your product mix, how is that likely to trend going forward?
So our group strategy is to focus on the small and medium enterprises. We are seeing better profitability in that segment. The large corporate business continues to be loss-making for the industry and also for Star Health. So we are kind of very conservative in that business. So the group strategy is to focus on the SME segment. And we have created, exclusive verticals and distribution teams to focus on the SME segment. And as I told you, we already have a very large distribution platform across the country to tap into the opportunity that SME business provides. And also our bank assurance partners, many of whom are public sector banks, have a very large SME portfolio. So we are looking at, working along with them to, manage that opportunity.
Anand, also wanted to understand from you with respect to how the industry dynamics are moving. Of course, there is medical inflation which is underway, and we have seen the prices of various treatments, etc. go up. But have the premiums moved in tandem with that? Are you factoring that in your pricing as well?
Yes, definitely. So health insurance premiums are directly linked to medical inflation. And last 2 years, the medical inflation has been on the higher side because of the COVID pandemic. But as we speak, we are able to talk to our hospital partners and we are able to bring down, negotiate some rates with them, because as we are coming out of COVID, the COVID related protocols are slowly being done away with. So as we expect that the medical inflation will be manageable this year onwards, but price hikes for our products are a constant, process. We did take a price hike of one of our products last year. We expect to take some price hikes in other products this year. So that will continually, we will keep on reviewing our products on a continuous basis and revise the prices as and when required.
Lastly, before we let you go, wanted to understand that what we are picking up from reports is that the life insurers might come back into the health insurance business. And correct me if I'm wrong there. Is that expected to increase competition, and is that something which the players are worried about?
So yes, I have been also following this in the media. The media is very interested in this news. But see, let me put this in perspective. Health insurance is a very engaging business. The insurance business is divided largely into two categories, life and non-life, right? And health is part of non-life, Sahib companies included. Life companies are dealing with products which are benefit in nature, where if the event, an insurable event happens, there is a lump sum amount paid at the end of the event. Whereas non-life companies largely deal with indemnity plans, whether it is motor, whether it is property insurance or health insurance. Indemnity insurance requires a different kind of engagement, different kind of service capabilities and all of that. So I believe that the business lines are totally different and it should remain the way it is. But having said that, if at all there is a opening up of the sector, and if life insurance companies are allowed to sell indemnity plans, As far as I can speak about Star Health, competition intensity will always remain. Even today, the health insurance business is extremely competitive. I believe that our business model is well organized and well structured to face any kind of competition. We have a very granular distribution. We are not dependent on any large, one single distributor or few distributors. So we do not expect that our business will get disrupted in any manner. What we have seen in the past is more players coming in, more awareness of health insurance is created. Star Health kind of gets benefited in terms of that awareness creation. So we are not at all worried as far as this development is concerned. But having said that, we will have to see. This is still in the media. There is no proposal on the table right now, and we will have to take it as it comes.
Okay, Anand, we'll let you go on that note. Thank you so much for making time and allaying a lot of investor concerns and answering the questions candidly. We'll let you go on that note.